Hi, everyone. I hope you're all doing great this week. My name is Greg Benner. I'm with Berkshire Hathaway Home Services here in Las Vegas. And today, I think we have something that should interest everyone who is either thinking of buying or selling a home or doing both, actually. What I've got are the June new home starts. I've got the weekly Mortgage Bankers Association Index, which tells us how the number of mortgages applications are rising and lowering, and the June existing home sales numbers. So we'll start with the new home starts for June. Some of the new homes are down, or I'm sorry, starts of the new homes are down 2% in June to 1.559 million units after revised 1.591 million units in May. So June was 1.559 million units and a revised 1.59 million units the month before in May. Starts are down 6.3% compared to a year ago. Now, these are new home starts, down 6.3% compared to a year ago. The level is below the consensus and a Econo-Day survey of 1.588 million units in June. While softer than expected starts are not that much of a surprise, the details suggest it is a weak report for new home construction. Starts of single-family homes fell 8.1% to 982,000. That's single-family homes down 8.1% to 982,000, which points to underlying starts returning to pre-pandemic levels. Single-family starts are down 15.7% compared to June 21. That's the previous year. Some of this weakness is due to higher mortgage rates, which we're seeing now, that have cut into demand for new homes. However, it is also a matter of high prices for single-family units that are driving some potential home buyers to smaller and more affordable multifamily housing and home builders to meet that demand. Multi-unit starts are up 10.3% in June to 577,000 and up 15.6% year over year. As noted above, the price of multi-units generally is lower than single-family units. This may also be a preference of renters who are buying to lock in housing costs and prefer to avoid the exterior maintenance of single-family homes. Demand for new homes has not much changed in the last 2 months. The total for permits issued is down only 0.6% in June to 1.685 million units and up 1.4% compared to June of 21, a year ago. The level for June is above the consensus of 1.666 million units in an Econo-Day survey. However, like starts, there is a shift away from building single-family units to multi-units. Single-family permits are off 8% in June and down 11.4% from a year earlier. Multi-units are up 11.5% to 718,000 in June and gained 26% from the year ago month. Starts and permits both point to continued activity for home building, but with some changes in consumer behavior now that mortgage rates have topped 5% for a 30-year fixed rate loan, and with every expectation that there will be further risings in the near future. Well, I can tell you that as of Monday, I think it was, I read, I know Bank Rate has the 30-year average rate at 5.74%. And I believe that on July 27th, it is, that the Fed is going to announce their next rate hike, which should be either 0.75 or 1 full point, I would expect. So we'll see how that goes. Last week, we went over some inflation numbers, and that's just, not abating. So I would imagine that they will be raising that again, like they did at the previous meeting, which was 0.75%. Next, we have the Mortgage Bankers Association Market Index and the MBA Market Index for the July 15 week. is down 6.3% from the prior week, off 12.3% from 4 weeks ago, and down 59.7% from a year earlier. Applications for both new mortgages and refinancing are lower as the housing market adjusts to depleted demand and potential home buyers balance the prospect of yet higher mortgage interest rates with the outlook for a let-up in escalating home prices. The purchase index is down 7.3% from the prior week, 14.3% lower than 4 weeks ago, and down 18.7% from a year ago. The refinance index is down 4.3% compared to last week, down 8% from 4 weeks ago, and plunging 79.9% from this time last year. Those who are refinancing right now are doing so more out of necessity, since it is unlikely that current mortgages have more favorable rates than those in mortgages taken out in the last 12 years or more. Applications for fixed rate and adjustable rate mortgages are both lower in the July 15 week and about equally so. Consumers are weighing the costs and benefits of a higher initial monthly payment of a fixed rate mortgage against the risks of being stuck with a higher rate when an adjustable rate resets in a few years. The fixed rate mortgage index is down 6.3% in the July 15 data, down 11.2% from 4 weeks ago, and off 62.4% from a year ago. The adjustable rate the adjustable rate mortgage index is down 6.6% from the prior week, 21.1% lower than 4 weeks ago, but up 17.7% from a year earlier. Adjustable rate mortgages can be a better option for those looking to enter the housing market for the first time, and or those who want to keep their initial mortgage payments lower. So there are the mortgage data for you to think about and digest there. Let's look at existing home sales. The National Association of Realtors reports sales of existing homes fell 5.4% in June to 5.12 million units, after an unrevised 5.41 million units in May. Sales are off 14.2% compared to June of 21. June's annualized rate is well below expectations in an Ocano Day survey that centered at 5.4 million units. Weakness in existing home sales reflects high prices and rising mortgage rates in June that are not alleviated by a nudge up in the stock of homes available for sale. The median price of an existing home rose 1.9% in June from May to $416,000 and is up 13.4% compared to last year. This is a new record high again. However, the pace of price increase appears to be slowing somewhat, with less competition for available units nonetheless. The NAR noted that the time on the market is the swiftest on record at 14 days in June, after 16 days in May, and faster than the 17 days in June of 21. So the houses are still flying off the market at a record pace of only 14 days in June. Wow. The NAR chief economist said this is likely due to home shoppers with a lock on a lower mortgage rate acting quickly before the lock expires. Supply of homes remains tight in the historical context at 3 months worth in June, although this is up from 2.6 months supply in May and 2.5 months supply in June of 21. Sales of existing single-family homes are down 4.8% in June to 4.57 million units and down 12.8% compared to a year ago. Resales of multi-unit homes are down 9.8% in June to 550,000 and off 24.7% compared to a year ago. The sales drop for single-family units may be due to an increase in the number of first-time buyers in the market, which rose to a 30% share in June. Sales of condos and co-ops may be softer due to competition from the supply of new multi-unit homes on the market. So those were the existing home sales numbers. And I hope that was some valuable information for everyone. Maybe you want to watch this over again and take your time. And because if you're thinking about buying it and or selling, this is some very valuable information for you right here. So take your time and take a look at it. Okay, folks, thank you very much. You have a great week. Bye-bye.